Everybody, and welcome to the first week of our spring novice trading competition and the Dash Trader Newsroom. Of course, this presentation is brought to you by DAS and NASDAQ. Today, I am your host. My name is Michael DeJoy. I'm the Director of Educational Services here at DAS, and going to be telling you a little bit about what's going on in the markets and in the world. So first item of news before we get to our number one best trader competition is the market is bracing for a hawkish or a more hawkish Fed, higher interest rates and a reduction and the reduction of the currently $9 trillion plus balance sheet seems to be at hand. And what does this mean for the markets? Certainly the Federal Reserve has been accumulating a very, very massive balance sheet. They've been acquiring assets in the open market. They have, almost done proverbially what everybody else has been doing, which has been buying the dip. As the market has continued, they have provided support to the market. This past week, we got the Federal Reserve minutes from last month's meeting. And obviously, we know that the Federal Reserve increased interest rates for the first time since the beginning of the coronavirus pandemic. And it was raised by a 0.25 basis points or 25 basis points is the first time that we've had a raise in a long time. And but not only that, they also said that they would be reducing it by just under $100 billion, which is a fraction of the enormous $9 trillion balance sheet that the Federal Reserve has accumulated. And certainly the market immediately reacted and sold off on that number. I mean, obviously, the market has been expecting this for some time. So to a certain extent, a little bit of a reduction of the balance sheet is already baked in. And then the day after the minutes were released, one of the Fed governors came out saying that, probably is only going to be, a little bit less, that the possibility of a soft landing still exists. And the market responded fairly positively to this news and bounced back a little bit. Today, the markets were off their highs from yesterday. And, certainly still low. We have this is our first down week in 2 weeks. We had 2 up weeks. And I would say that fits squarely into the, framework of a bear market rally. And we're going into earnings season. So, financial companies tend to lead earnings season. They tend to start off earnings season, which we'll be talking about shortly. But certainly we've seen a lot of softness in financials. And today we had softness in technology, as the NASDAQ is the one index that was down the most. In other news, we have the Russian ruble, which President Joe Biden called rubble. Does not seem to be rubble just yet. It has bounced back to its pre-war levels. This is largely due to the fact that Russia has required the purchase of oil and natural gas in rubles. That means that they are, requiring countries that most of Europe is pretty dependent on Russian oil and natural gas, and therefore those countries are converting and purchasing their oil and natural gas in rubles. Also, sanctions tend to have long-term ramifications, and they don't tend to have very, very sharp teeth in the short term. And certainly that has played into this situation. Russia is still selling over $1 billion a day in oil and natural gas, mainly to Western Europe, as well as the Middle East. And that certainly is enough to continue their war efforts. We've had some really serious, unfortunate events. It looks like there was a passenger train exiting the Ukraine that was, or moving people within the Ukraine that was hit by somebody. and many people are reported dead. So our hearts go out to the people of the Ukraine as this war enters into its almost eighth week now, almost 2 months in. On other notes, let's just jump into earnings season, which is my favorite time of year as a gap trader and as an options trader. Earnings runners, 2 weeks going into 2 weeks prior to earnings is when earnings runner season starts. If you're interested in learning more about earnings runners and gap trading, certainly I'd love to speak to you about it. You can sign up, for a consultation and find out more about those really, really effective styles of trading. Certainly, we're going to be seeing that in the number one best trader competition. People will be trading gaps, and they will be trading the earnings runners and the stocks after they have earnings. So earnings season is fast approaching. What to expect from the second quarter? Already we've seen lots of pre-warnings. So just to go into the last point of news, a company like McDonald's used to get about 10% of its revenue from the Russian Federation. Now all of those operations are gone. Apple's not selling iPhones in Russia. So the ramifications of the war in Ukraine and the ramifications with all of the major corporations, the effects of having being less 185 million person market should have some serious effects on those earnings. Now, the way that investors and traders are going to react to those depressed earnings is another story. We have already seen some companies shoot to the upside, companies like Mosaic and Kruger Foods, really, potentially could benefit from some of the food shortages and some of the other problems that will probably and are expecting to come from this global conflict in Europe. But certainly in terms of earnings, we're seeing a lot of corporations are pre-warning in the direction of, don't expect us to have this revenue. A company like Coca-Cola, certainly we've already mentioned McDonald's and Starbucks. These are companies that have a lot of exposure. And even the banks have a fair bit of exposure. I know that when I had been doing my research, JP Morgan had something like $1 billion plus exposure to Russia. Every one of the banks had done deals and has issued loans in Russia. And that exposure is certainly going to play out this earnings season, which is one of the reasons why the financials were already showing signs of softness in the past week and a half, even when the rest of the market had rallied pretty considerably. So let's jump right in to the competition. Actually, before we jump into the competition, I would like to do a quick chart analysis. So let me do that first. So let me bring up my Dash Trader. So here we have it. This is my Dash Trader from today. I'm going to make my chart of the S&P a little bit bigger. We are going to take a look at the daily chart. All right. So here we have our daily chart of the S&P. We had a very, very significant rally off the triple bottom here. So in this area, and by the way, I'd like to feature some of the amazing charting capabilities of the Dash trading platform. The charting is really, really excellent. I'm going to put a rectangle right here. This was a pretty big area of support. As you can see, we have a 1, 2, 3 ascending lows. One of the rules of the market are that if the market fails to make a low and make a lower low, that it will make a higher high. It didn't do it on that run. Fails to make a lower low, it will make a higher high. And certainly it made a higher high. Not only that, it rallied way off the lows and came back into this prior area. The area, from a technical perspective, we would call this the area from which we broke down. Okay, so let's say the breakdown occurred here, right? If you look, I mean, we almost got from the breakdown. This is where the breakdown occurred. and we got almost up to the point that we broke down from. In fact, if I were to draw a horizontal line, we did basically get down to the point that we broke down from. We broke somewhere in this area. So when you want to indicate an area, you put a rectangle on the chart. So this was the area that we broke down from, and then we got back into that area, and we are kind of in that area still. Now, price stayed below the moving averages for a very long time. We've popped back up above the moving averages. We hit into that pretty significant level of resistance, and then we have come back down. Okay, now we held the line on this on the 50 period moving average. So we did hold the line on the moving average. So we did not break it below the 50 period moving average on the daily chart, which is a very, very bullish and positive sign. But again, we need to hold that on more than just the S&P. Let's take a look at the QQQ. So on the QQQ, we did not hold above the 50 period moving average. Now, I would argue that the QQQ is the index that led the rally post-pandemic. And I'm scrolling back to show us the size of that rally. So we came all the way up from here. I'm going to switch to my weekly. Okay, so we came all the way up from here. And sure enough, we had three big rally bars. And then we hit into the 50 period moving average on the weekly, and then have rejected off the 50 on the weekly. This is a pretty bearish signal. Certainly the S&P is a little bit better than the NASDAQ. And of course, the last one, I'm going to jump back to the NASDAQ real quick. The IWM is way weaker than the NASDAQ. IWM is the Russell 2000 index. It is the index that is a bit of a leading index. It is the small cap companies. They are the most interest rate sensitive. So usually where the Russell goes, the NASDAQ will follow. And of course, the NASDAQ being more bearish, was more bullish after the pandemic and is now more bearish since the sell-off started. And I would expect that to continue. I would still see that technology, having done so well during the pandemic, is probably not going to do so well going forward. Let's take a look at the DIA. Here is the DIA. So DIA holding up better than the S&P, better than DIA represents the Dow Jones Industrial Average. They are more industrial companies. Some of them are commodity companies. Some of them are miners. And certainly you could see something like FCX, which is a mining company, no downtrend at all. It's just in the midst of an uptrend. So FCX doing very, very well. It's a mining company, et cetera. And of course, you look at something like a gold company, like Rand Gold Corporation, GOLD. The stock is at all-time highs or very, very much close to them. So gold is doing really, really well. So let's go to some of the other things that we usually check out when we go to the charts. GBTC, which is representative of Bitcoin. So Bitcoin these days trades with technology. So you can see that Bitcoin was a little bit soft, and certainly not it's trading very similar to the NASDAQ. ETEG, which is this is the Ethereum tracking ETF. This is ETHE. Also trading with Bitcoin a little bit weak. And of course, let's look at GOLD, gold. So gold broke out of its pennant here. This is called a bull pennant. So this would be the flagpole. Let's see here. Let's draw these lines here. So here you go. You can see kind of the little breakout point that we've just broken out of a diagonal breakout point. Make it a little bit more steep, but you can see that we just kind of broke out to the upside on gold. Now you do have some horizontal resistance here. And obviously we have more horizontal resistance way up here. But certainly gold giving us a little bit of an indication that it's moving back to the upside once again. All right, so we covered gold. Last but not least, let's take a look at oil before we go to the number one best trader competition. So here you can see that same kind of pennant, bull pennant forming on the equilateral triangle, forming on oil. We did get a significant sell-off in oil as the president released a large amount of the strategic oil reserve. That is a short-term fix. The overall problems with supply and oil will be with us for a while, especially as the war continues. So certainly looking like we're going to break out to the upside on gold, oil, and other commodities. All right. I'll just do one more, just DBA, which is food commodities, broke out to the upside. DBA really breaking out to the upside. This is a commodity ETF, a food soft commodity ETF, and it broke out to the upside pretty considerably. All right, so let's jump to our number one best trader competition. One best trader competition. So this is for this week, April 4th to April 8th. This is our first week of the competition. And our number one best trader for the week is Best 0996. Okay, they had a little bit of a rough day today, down $154, not unmanageable. So far with $5,504, leading up the competition. So Best 0996, by far and away, our number one best trader for the week. Then we have Best 1003, had a pretty good day with $429 in gains, and really not leading too far behind with $2,586. Then we have our third place trader, Best 981, with a loss of $660 and up $1,247 so far for the competition. And we have a pretty good leaderboard. We have numbers 1 through 7 all being profitable and positive. And then we have the like usually happens is that we have number 8, 9, and 10 just being slightly negative, but not having lost too much money and managing their losses fairly well. Really, at this point in the competition, it is anybody's competition, meaning there is no certainly the number one best 0996 is by far the is out in the lead, but they need to maintain that lead over the next couple of weeks. So let's jump and take a look at some of the stocks that they were trading this week and for today. So the top 5 stocks are, I would say from my opinion, are these kind of one-hit wonder stocks. These are fairly low price stocks and are, I would call them the popper and droppers. So we have MDVL is number 1 on the top 5 stocks traded. And then we have PHIO. So our scalpers are certainly the most active at the current time. We have BFRE, and then we have LYRA at number 4, and then TKAT. We're going to take a look at these. Now, before we take a look at these stocks and their charts, let's take a look at some of the old standbys. We have the UVXY, which is the inverse volatility ETF, which is kind of it's there very frequently when we have any kind of a down market. We have Twitter. Obviously, we know that this week, Elon Musk acquired a fairly substantial stake in Twitter and joined the board of directors in Twitter. And then we have NEO, another frequently and actively traded company. We have Robinhood, which had some news as well today. So we have a lot of stocks that are AMD is our old standby. It has been in every one of our competitions thus far. We have NVIDIA, another one of our old standbys. Oxy, Occidental Petroleum. We have BABA, JD.com, Apple, rounding off our top traded stocks. All right, so let's jump to the, let's switch back to the screen share. All right, so in the screen share, let's do MDVL. All right, so here's this is why I call them, these are the popper and droppers. So MDVL was basically, you know, under $1. It was 90 cents going into the last 2 days, and then it popped up to almost $2. It actually hit 260 at the high. This is a company that just, it's a one-hit pop and drop, short squeeze, whatever you want to call it. We've seen a lot of this. Let's take a look at the intraday chart. See a big run up, secondary run up, and then pretty much fade the rest of the day. As the day went on, it did finally break down to the area from which it gapped up to. Let's take a look at PHIO. I mean, this one just kind of took off and did not look back. I mean, this just blasted off today from 190 and shot all the way up to $2.65. You know, obviously this is a news event of some kind, and it's just being accumulated like nobody's business. So I imagine a lot of traders were trading this today. It is just stair stepping into taking the stairway to heaven, so to speak. So now we got the next one. We have BFRE. Very similar to the last two. Another one that just popped and then dropped today. This one popped yesterday, gapped up today, went a little bit higher. So this one took a move from around $3.50 all the way up to $5 and $5.50, and then it's been fading back ever since. Okay, and we have this one right here, and we have on the intraday chart, we have 5-minute time period. You can see that we've rallied up, we faded back, we gapped up further, and then we faded back once again. Next one, we have LYRA. LYRA, we had a gap up, we rallied further, and then we have sold off. We pretty much chopped around all day. And mainly we've been chopping around sideways. All right. And the last one is TKAT. TKAT. This is a little bit more of a regular trading stock. And it's been, you know, pretty much it popped up about the beginning of the week, and it's been staying up ever since. So this one's held up pretty well. All right, so that's pretty much it for the stocks that our participants have been trading. Let's go to the last and final section. One second while I bring up my last and final screen share. All right, so to all of our competitors, review your trading strategy. Have you what has made you be successful? Have you made any mistakes? What have you learned so far from the competition? Reminder, there are no overnight holds. Okay, if you have not traded yet, be sure to start trading by Thursday, 4/14, or you will be disqualified from the competition. Some other final notes: the Spring Novice Competition. Please note there are only 4 trading days next week. The market will be closed on Good Friday in observance of the holiday. Competition runs until April 29th. And visit number1besttrader.com for more information. Follow us on social media at OneBestTrader. Again, follow us at Twitter, OneBestTrader, Facebook, and Instagram. If you have any further questions, comments, etc., just please let us know. You can email us at info@OneBestTrader. Thank you so much, and have a wonderful weekend, and see you all next week.